All right. In this video, I'm going to be addressing the journal entries that relate to a partnership. So I'm going to go through 4 different scenarios. The first one is initial investments into a partnership. Then the last 3 have to do with allocating the income, and then, of course, the journal entries that go along with it. So in the first video here, in the first problem, we have Robin, Benjamin, and Leanne form a partnership, and each partner makes an initial investment into the partnership as follows. So Robin gave $30,000 cash, Benjamin $25,000 cash, and Leanne $50,000 cash. And then I also give you their profit and loss ratios, but for this particular exercise, we don't need the profit and loss ratios because we're going to credit to each partner's capital account the fair value of whatever was their initial investment. So we've got, now we're going to record the entry, and we have cash, and the cash that was contributed into the partnership was $80,000, $50,000 from Leanne, $30,000 from Robin. There was also equipment, and the equipment is going to be recorded at its fair value, which was $25,000. And then now we're ready to give to the partners then their capital share. So there would be Robin capital, and Robin her contribution was $30,000. Benjamin capital, and his contribution was equipment worth $25,000. And then Leanne capital, and Leanne's capital is $50,000 for the cash that she contributed. And that's it. All right, so when we record the initial investments, that is to say, once the partnership was formed, then we're going to debit into the books of the partnership here whatever assets were received, cash, and in this case, equipment, but it could have been inventory, or it could have been, who knows, buildings and land, etc. And then we're going to allocate to each partner's capital account the value that they have contributed. Now, in the next problem that we have is we're going to actually allocate income. So in this case, this partnership, just 2 partners, Mary and David, they share the profits and losses on a 3-5 basis. So what that means is for every $3 that Mary is allocated, or her profit share, then there's $5 to David. So how do we kind of get this into a number that we can better use for our calculations? All right, so I'm going to give you then the formula. So we know that Mary is 3, David is 5, and the total is 8. So we're going to say here that 3 divided by 3 plus 5. Okay, this is going to be equal to the percentage. So this is 3 divided by 3 plus 5, and that gives us 37.5%. Now we're going to do the same for David, except for David is on the 5 side. So 5 divided by 3 plus 5 equals, let me just move this out of the way. All right, and then David's share is going to be 5 divided by 3 plus 5, which is 8, and that's 62.5%. So the total then, if I add these all up, it's 100%, and that's what I want, 100% allocation. Well, that's what all of us would want. Now let's see here. During this current year, we need to allocate the profits. So they tell us that the earnings or profits totaled $84,000, and Mary receives a salary allowance of $1,500 per month. Let me just earnings for the year. I'm going to change that one word, and the reason I'm going to change it is just so it's clear what's the time period that's being covered. Okay, so the net income we know was $84,000. How much is allocated? Well, Mary gets a salary allowance of $1,500 a month. So $1,500 a month, but there's 12 months in a year. So Mary's salary allocation is $18,000. There's no indication of anything going to David, so he doesn't get a salary allocation. So the total for the salary allowance is $18,000. So after we allocate the $18,000 from the $84,000 means that there's $66,000 that's left, and that $66,000 is going to be allocated to Mary and David using their profit and loss ratio. So the remainder is $66,000, and Mary gets 37.5% of that. David, of the $66,000, he gets 62.5% of that. So what we see is the remainder, $24,750 to Mary. David, $41,250. So the sum total that is allocated or distributed is $66,000. So what remains after this is zero, and that's what we want. So it needs to be zero so that everything is allocated. And now we can figure out, well, how much total is allocated to Mary? Well, her salary allowance plus the distribution of the remainder means that she is allocated $42,750.
It's $15.30.
David, $41,250. And then the sum total, which is $84,000. So $84,000 matches the net income to be allocated. Zero here tells us that all of the $84,000 has been allocated. So what is our journal entry? Well, keep in mind that prior to this, the company would have closed all of the revenue accounts. So you would debit revenue and credit income summary. Then they would close all of the expense accounts. So they would debit income summary and credit each expense. And then finally, which is what we're going to do now, is there is net income. There was $84,000 of net income. So that's the amount that is in the income summary account, a credit balance. So we're going to close that. 84,000, and we're going to close the income summary account, and then what we'll do now is allocate to the partners their share of the 84,000, which we computed in this table over here. So we have Mary Capital, and Mary is allocated $42,750, and then David Capital, and David would be $41,250. Now, I always like to kind of just double check to make sure that my debits equal my credits. So I'm going to use this summation here, and it shows. I got a lighter color because, we don't show totals in the journal entries, but I just want to make sure that the debits equal the credits, and they do. All right, so that's just for checking purposes. All right, so we've done the first one. Just as a review, we talked about the initial investment and how we are going to record the initial investment on the books. That was with number 1. Now with number 2, we're looking at a fairly straightforward allocation of income, net income to the partners when one partner has received a salary allowance. Now, let's take a look here at a little bit more complex situation. We've got 3 partners now, Maddie, Dana, and Sophie. And the information tells us that at the beginning of the year, their capital balances were $68,355 for Maddie, $35,705 for Dana, and $163,530 for Sophie. Now, below here, they also give us some further information. They say that there are salary allowances that go to each of the partners. There is interest on the beginning capital balance. So on the beginning capital, they will be allocated interest of 7.75%. And then anything that's left is going to be allocated using the profit and loss ratio. So net income was $183,000. All right, so we have $183,000 that needs to be allocated. There are salary allowances. Maddie gets $38,000, Dana $9,600, and Sophie $9,000. All right, so these are the salary allowances, and the total salary allowances is $56,600. So after the salary allowance, then there is $126,400 still to be allocated. So we've allocated already the salary allowances. Now we're going to do the interest. And the interest, and I'm going to use the rounding function here because I want it to round to the nearest penny. The interest is based upon the beginning capital balance and that interest, which is 7.75%. And I just want to round it to 2 decimal places. That is to the nearest penny. All right, so Maddie would have been allocated interest of $5,297.51. Now I'm going to do the same for Dana. All right, so it's the round function, and it is beginning capital balance $35,705 times the interest rate of 7.75%, and we round that to 2 decimal places. So Dana's interest turned out to be $2,767.14. And finally, we do the same for Sophie. Well, I'm going to make my life a little easier, and I'm just going to drag and drop it. And we see that okay, $12,673.58. So the sum total that's allocated as interest is $20,738.23. So after the interest, then there is still $105,661.77, the remainder that's to be allocated between the partners in the profit and loss ratio. All right, so this is the remainder, 105,661.77 times, for Maddie, it's 30%. Now I'm going to add, I want to round this formula, and I want to tack down the F5 because I always want it to look here, and then multiply it by the different profit and loss ratios for each partner. Carry it out to the nearest penny. So I'm just adding this round function that says calculate their portion of the remainder and round it to 2 decimal places. So that's how much Maddie got. All right, I'm going to do it also for Dana. We're going to do round, And for Dana, it's still the 105,661.77. And for Dana, it's 45% of that. But then again, we're going to round it to 2 decimal places. All right, so Dana gets 47,547.80. Now I'm just going to drag and drop it over so that Sophie gets 26,415. And now I want to just sum up those. And when I take the remaining to be allocated minus the total allocated and the distribution of the remainder, then this is 0. And that's exactly what I want. Or that's what anybody wants. All right. Now what we're going to do is to calculate, well, how much is going to be allocated to each partner in total. So for Mary, it's a sum of her salary allowance, her interest, and her share of the remainder. And so Maddie will get $74,996.04. And I'll just do the same for Dana, which is $59,914.94. And for Sophie, $48,089.02. All right, so with this information, we can prepare the journal entry to allocate the income to the partners. Again, the net income was $183,000. That will be in the income summary account, and that is the amount that we are going to debit to or reduce the income summary account by. All righty. Then we're going to now allocate to each partner. Mattie, capital, Dana, capital, and Sophie, capital. And remember, capital is an equity account. The normal balance is credit, so we're going to increase their capital accounts by the amount that's allocated to them. So for Mattie, it's $74,996.04. For Dana, $59,914.94. And for Sophie, $48,089. And as usual, I like to just check my calculations, and it shows us here that the debits are equal to the credits. I'll make this a little darker just for a moment so you can see it, but it's 183 and 183, so I am thrilled. I know my debits equal my credits. So one last thing that I'm going to do is to compute what is the ending capital balance for each partner before we take into account any withdrawals. All right, so the beginning capital for Mattie was $68,355. She was allocated an additional $74,996.04. So at the end, Maddie's capital balance before withdrawals is $143. And then I'm going to do the same for the other 2 partners. 35 plus 59 gives us 95,619, and for Sophie, 211,619.02. Now, this is all well and good because sometimes partnerships make money, but sometimes they may make not sufficient income to cover the salary and the interest allowances, or they may even lose money. So let's take a look at the last tab where we have a problem where there is net income, but the net income is kind of low. So what happens in those cases? Okay, so the net income is $45,500. Now the salary allowances, The salary allowance is $38,000 to Maddie. $9,600 to Dana, and $9,000 to Sophie. So the total of the salary allowance is $56,600. All right, so now here we go. There was $45,500 of net income, and we allocated for salaries $56,600. So we've got a negative number here, and we're just going to work with the negative number. Now, interest, and recall that interest is on the beginning capital. In this case here, I have 4%. So the beginning capital multiplied by 4%, and I think I want to round this to the nearest penny. Okay, so I'm just saying take beginning capital, multiply it by the interest rate of 4%, and then round it to the nearest penny or to 2 decimal places. All right, we'll do the same for Dana. Beginning capital balance times 4%, round it to 2 decimal places, and then I'll just drag it across for Sophie. So these are their interest allocations, and the sum total of the interest allocations is $10,703.60. So we're going to see, well, what remains after this? Well, this is a negative amount. So there is a negative $21,803.60 that needs to be allocated to the partners in their profit and loss ratio. All right, so we're going to take the remainder, which is $21,803.60 negative, tack that down, multiply it by Maddie's ratio of 30% for profits and losses, and round it to the nearest penny. All right, so we're going to take the remainder to be allocated. In this case here, it's a negative amount. Multiply it by the profit and loss ratio for Maddie. And so of this 21,000, Maddie is going to absorb 6,541. And I'm going to make my life easy. So I'm just going to drag and drop all the way across. All right. The sum total that is allocated for the distribution of the remainder is $21,803.60. And this minus this still needs to be 0. Now, how much is each partner going to then receive? All right, so this is the sum, salary, allowance, interest, and then distribution of the remainder. So this means that Maddie's capital balance is going to increase by $34,193.12. Then we do it for Dana. Her capital balance will only increase by $1,216.58. And then for Sophie, capital balance goes up by $10,090.30. All right, so remember now, when you're doing this journal entry, it's going to be done the same way as we did in number 3, except for now we're going to be using these numbers because in the end there was a negative amount that needed to be allocated to each partner. All right, so that's it for this video. I hope this is helpful. If you still have any questions, please ask in the ask the professor or send me an email. Okay, bye-bye.